Right, good morning, folks, as we head into European trade on Friday, the 28th of July, and we're at the end of another trading week and a pretty action-packed week to do with the central banks, which has concluded in terms of central banks over the course of this morning with a slight policy adjustment from the Bank of Japan, announcing that it will make its yield curve control policy more flexible, and that they will raise the target range from 0.5%, or the upper band of the target range from 0.5% up to the 1%. Now, they did suggest that 0.5% was not a complete, set in stone. It was just a target. They have allowed that to raise to 1%, and that has strengthened the Japanese yen somewhat over the course of today's Asian session, and as likely to prove somewhat supportive, at least, for the Japanese yen going forward. It hasn't gone through the roof like I thought it may have done, but is positive on the day and probably is likely to continue into the trading sessions ahead. Apart from that, not really a great deal else apart from that. Chinese yuan inches up as PBOC maintains support through daily fixing. So the Chinese continuing to lend support to a faltering economy, and that is supportive for Asian markets the longer that continues. And obviously, if the Chinese economy does pick up and the data does begin to reflect that, that is then a positive in turn for the global economy. Apart from that, we're not got much really else to go off. I mean, see, this Bank of Japan sets the stage for higher yields, so they are allowing yields to run higher, and that is to be supportive for the Japanese yen. And you can see the Japanese yen across here higher across the board. Flicking between positive and negative in the US dollar and the euro, which, as I said, maybe you wanted a little bit more positive than a little bit more positive from that than that. But Nikkei down, which is expected, so the yen up, the Nikkei down, which is as I said, expected when you are looking towards a more hawkish step from the central bank, in terms of allowing interest rates to run higher. Negative for the stock index, positive for the currency. We can see US equity indices, or US equity futures, should I say, higher across the board. European equity futures lower across the board. We've got some key economic data out over the course of the day, so I'm not going to read too much into that price action at this time of the day. Yields pretty mixed, as you can see. The US dollar mixed, Aussie, Kiwi both lower. And be somewhat surprisingly due to the Chinese continuing to lend support to their economy. Apart from that, if the euro's higher across the board, apart from against the Japanese yen, so it's movement across this morning, but not really a massive amount. Retail sales from Australia, consumer spending obviously minus 0.8%, which is a reason for Australian dollar downside in today's trading session. The fact that it's down that much off the back of that, though, is a little bit surprising to me, especially with China continuing to lend support to the economy. As I mentioned, I wouldn't have expected the Aussie dollar to be down 1% the way it is, but that is what markets are doing at the moment. Obviously, the Bank of Japan we have spoke about, and we'll get around to the data a little bit later on once we get around to it. But massive downside in US stock indexes yesterday. You can see the S&P, you can see the Dow Jones, the Nasdaq, and the Russell all getting absolutely hammered off the back of this GDP print yesterday. Plus those durable goods orders. So consensus 1%, actual 4.7, a massive beat on the consensus on the durable goods orders. Obviously a manufacturing number in the United States. GDP advanced figure, the first figure, consensus for 1.8%, actual 2.4%. Now 2.4% growth in a quarter is still far too strong in order for the economy to work healthily. So definitely raises the bar, or raises the possibility of an interest rate hike at the next meeting, which, although it is 54 days away at this point, so a long time away for that, but it's at the start of more positive economic data. I mean, 2.4% GDP growth in a quarter, certainly not positive for getting inflation under control. So maybe that's something we need to keep an eye on when we get into the next CPI print from the US. But substantial downside across US stock indexes off the back of that, and substantial upside in the US dollar off the back of that. So you had the dovish ECB, pushing back on the on the rate hikes, saying they're going towards a more data dependent approach, what they had alluded to earlier on, but they have said that there is no end in sight for interest rate hikes. But now there is an end in sight. People think we may get another 25 basis points out of the ECB, and then that will be done. But the incoming economic data is negative. Inflation continues to trend lower. They will probably want to wait and see how the policy measures that they have undertaken already affect markets, as there is a bit of a lag between adjusting policy and those effects taking effect in the economy. Now, apart from that, you can see 10-year yields continue to push higher. 2-year yields higher off the back of that GDP print yesterday, have pushed slightly lower into today's session, but massive downside on gold yesterday. Oil, unfazed, continues to want to push higher. Looks like it's making another attempt higher off the back of supply constraints throughout the world at the moment. You can see the Japanese yen has been flying around. I would have expected a little bit more upside personally in the price of the Japanese yen. Let's just see what yield on the 10-year is doing. You can see it's now popped above that 50% level. If we just have a look back here, last time it got above 50% back here, it was shot back lower. Obviously, that is the Bank of Japan purchasing bonds to push yields lower. Now they're going to be happy to let it run above 0.5%. Now, the more that runs higher, you'd have to imagine the fact that they've said they're going to allow it to get to 1%. You'd have to imagine it does make its way up towards this 1% figure at some point over the coming trading sessions. And I do see some further upside in the Japanese yen off the back of this. Now, you do need to keep an eye on, just have a look at bond yields across the board. You do need to have a look at bond yields across the board, what they're doing in the other respective nations. If it wants to load for me, it seemingly doesn't want to load. Yeah, we'll park that idea for this video. But you're gonna have to keep an eye on bond yields across the board. If global bond yields are rising, well, then it doesn't really have the same effect. But if global bond yields are not rising and the Japanese 10-year yield is the only one that is, the further that closes the gap, the more positive it is going to be for the Japanese yen. So this is definitely something we need to keep an eye on in the coming weeks ahead. As I said, if that goes into an uptrend, Japanese 10-year yields push up towards that 1%, that is supportive for the Japanese yen as and when that is happening. So Japanese yen upside seems a decent bet as we head into the next few weeks. Something definitely to keep an eye on. So yeah, something definitely to keep an eye on, especially when you have a look at dollar yen. We'll stick it back even on a weekly time frame. You can see how far this has come. That's a weekly time frame, maybe not the best, kind of longest way to look at it. But you can see back in 2021, beginning of 2021, from the low back up to the highest, it's a 50% gain, and then you've pushed back up to these highs here. So there's a lot of room that this has given up. This has moved a lot to the upside, which means the Japanese yen has moved a lot to the downside off the back of yields globally rising and the Japanese yields not. So there is a lot of room to give back. Right, there's a lot of room to give back, and I think this level becomes important on dollar yen. If you can get below that level there, which we did have an attempt at testing, that would create a bit of a head and shoulders for us, as you can see there. So we get through that support level, break your neckline of your head and shoulders, you'd have to imagine you at least see it somewhere down towards here, maybe towards 130 is a decent bet as well. It's a substantial move. If it does get down there, definitely a move you can make a bit of profits on. So 10-year yields in Japan move higher without the rest of the world moving with it. Upside in the Japanese yen, downside in dollar yen seems a good trade over the next few weeks. So we'll keep an eye on that, see what we can do with it. But yeah, that is going to be it from me for this video. Heading into European Open now. 8 o'clock. I got a raft of economic data later on. We've got GDP out of Germany at 9 o'clock. We have got CPI out of Germany at 1 o'clock. And we've got PCE out of the US at 1:30. Now, with the ECB yesterday, some negative GDP prints and some negative inflation prints maybe mean the ECB going to pause and is likely negative for the euro. What that means for the DAX, I think, is a little bit trickier to wrap your head around. I mean, negative growth, the longer growth remains negative in Germany, it's not really a positive for the DAX now, is it? So I think it's a little bit more difficult to read into the DAX personally, but I think euro, especially, you know, if the ECB are going to remain data dependent going forward, and you're getting weak GDP figures, weak inflation prints, and that's probably an easier sell of the euro than it is of the DAX. So I will keep an eye on that. But inflation just come out of Spain. You can see higher than consensus monthly figure, higher than consensus on the yearly figure. Is that something we need to keep an eye on as we come into German CPI a little bit later on today? But weak prints here, so weak GDP prints and weak inflation prints should be a decent bet for some downside in the euro. 1:30 p.m. core PCE, the Fed's preferred metric of inflation at 1:30. They are remaining data dependent going forward, and with that strong economic data yesterday, with those durable goods orders, with those GDP figures, you want the data to trend. Right, so positive yesterday, you'll hope for positive today in terms of getting a move. That should be dollar supportive, should be stocks negative if you get higher than consensus core PCE, especially if you come in above last month's 0.3%. So that is something, that's kind of what I'll be hoping for. In terms of like a humanitarian perspective, it's not what you'd hope for, higher than inflation, but in terms of a trading perspective, what's gone on yesterday and then what the Fed have said, I think the easier trade is, or the more beneficial trade is, I won't say easier trade, but the more clear of a trade, shall we say, I think is positive or higher than anticipated. Inflation figures goes in line with that data yesterday, goes in line with what the Fed said in terms of being data dependent. The data trends higher, and that tells you all you need to know. But that's it from me then. We'll update a little bit later on as we head into a US session after the CPI prints later on. So best luck if we try and trade them. A few things to go off: Bank of Japan, German GDP, German inflation, and US inflation a little bit later on. So bunch of things to finish off the week. I'll be into a weekend. We'll be back next week for another week of trading, but we'll update a little bit later on as and when these figures come out. So best of luck trading. I'll speak to you a bit later on.